Hi all. Today we're going to see about what is auditing, its definition, and its objectives. The term audit, it is derived from the Latin word order, which means to hear. So in earlier days, an auditor used to listen the accounts read over by an accountant in order to check them. So auditing is old as accounting. So when the accounting has introduced, the same time auditing also will be there. So whatever the accounts maintained in the company, the accountant will read over, the auditor will listen, and he'll audit that. Larry B. Sawyer is known as the father of modern internal auditing. He is now, we call it as father of modern internal auditing. So audit, what do you mean by audit? Audit means a system of checks. We call that as system of checks. When audit only mean person of integrity, okaying accounts, read to them by the businessman. So audit got legal recognition with emergence of joint stock company. So this is what auditing. So definition. So auditing has various different types of definition by different experts. So I have taken Spicer and Pegler's. So auditing is concerned with determination of accuracy and reliability of financial and other records and statements. So first of all, you're supposed to be clear with what is auditing. Auditing is nothing but to determine whether the financial statements shown by the company, the records shown by the company is proper, it is correct, and it is true. Whether the supporting documents are attached for the transaction, whatever they have submitted. So everything should be clear and proper. So this is what auditing. According to Spicer and Pegler, an audit is an examination of books of accounts and vouchers of a business. The object is to enable the auditors to satisfy themselves that balance sheet is properly drawn up. It gives a true and fair view of state of affairs of business, and profit and loss account gives a true and fair view of profit and loss of financial period. So what Spicer and Pegler is defining is auditing is nothing but it is an examination of books of accounts and vouchers of a business. So whatever books they are maintaining, whatever accounts they are maintaining, and whatever vouchers they are having, in order to examine everything, we call it as an audit. And in order to satisfy, so they need to check, the auditor need to check whether the balance sheet is drawn properly and the profit and loss account is showing the true and fair view of the business during that financial period. So this is what the definition of Spicer and Pegler. So next is nature of audit. So the important statement, and it is a famous statement while we are using the term audit in the audit subject is auditing begins where accountancy ends. This is the very common statement they'll use in audit, which is nothing but whenever auditing begins, that time accountancy will end. Okay, whenever accountancy end of accountancy, the auditing will begin. That's it. After the accountant has completed his work, an auditor, they'll usually call an auditor to and they'll invite them to verify the work done by the accountant. And in order to verify the work, the auditor is appointed by the company and they'll check all the transactions they have shown in the financial statements are correct or wrong. So it is not the duty of the auditor to prepare the accounts, it's the duty of the accountant to prepare all the accounts submitted in the company. So he is concerned with the critical examination and verification of accounts prepared by the others. So auditing presupposes the existence of completed financial statements prepared by the accountant. So after completing his work, auditor has to submit, after audit everything in the company, the auditor has to submit a report of the fact whether or not profit and loss account and balance sheet exhibit true and fair question of the business. So the last work of the auditor is he need to submit an audit report which should report to the company that whether they are showing the profit and loss and balance sheet is showing the true and fair view of the business. Next is objectives of audit. Objective of audit is nothing but it's a systematic and scientific examination of books of accounts of a business. And the auditing is undertaken by an independent person or a group of persons who are duly qualified for the job. Always an auditor is a qualified professional person. He used to have a group of people, they'll call it as audit staffs. He'll take along with him while they are going for audit. Audit is a verification of results shown by the profit and loss account and state of affairs as shown in the balance sheet. We have already saw and the nature of audit. So audit is a critical review of a system of accounting and internal control. Auditing is always done with the help of vouchers, documents, informations, explanations received from the authorities. So whenever the auditing is done, they need to verify all the vouchers submitted by the company, documents submitted by the company, information they have given, and the explanations from various authorities in the